Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm glad to have Gene Epstein with me. Once again, I'd like to have Gene with me on the first, the Tuesday before the first Thursday of every month, because Gene heads up and does an excellent job with a monthly meeting called the New York City Junto that's held at the General Society Library, 20 West 44th Street here in New York. That's between 5th and 6th Avenues. Welcome, Gene. Thanks for joining me again.
Happy to be back.
Really always good to talk to you. I might just tell any of the listeners that are in the metropolitan area might want to seriously consider attending this. It's a great event. Always a lot of audience interaction with the speakers, and always intellectually challenging. And Gene does a great job of keeping the meeting civil and in order and moving right along. So, Gene, tell us about this week's the Junto that's coming up this week.
We're having Jason Riley, who has just recently left the Wall Street Journal editorial board to join the Manhattan Institute. He is a black commentator, African American, and he's written a recently published book called "Please Stop Helping Us: How Liberals Make It Harder for Blacks to Succeed." And he's already gotten a lot of pushback for that book, I know, from the New York Times especially. And I believe that he's among a handful of black commentators who are pretty outspoken about such issues of how the liberals are actually making it harder for blacks to succeed. So it should be a pretty provocative and lively evening.
Oh, it certainly should be. I would imagine your friend, your buddy there, Paul Krugman, must really love this guy's views.
Yeah, Krugman hasn't commented on Riley, but I imagine that he wouldn't especially like him. There was a black sociologist from Harvard named Orlando Patterson who did a major attack on Riley's book in the New York Times Book Review about 3 weeks ago. I actually, I favorably reviewed Riley's book for Barron's, and I actually wrote a letter to the editor protesting the idiocy of Patterson's attack. I'm actually going to have Jason Riley respond in detail, because I'm going to post on the screen what Patterson said about his book, and give Riley a chance to respond in some detail to what are supposedly the problems with his claims. Also, Nicholas Kristof, who's a New York Times columnist, has written a lot about this subject and is in effect attacked Riley. So it's clearly, and of course, what with Ferguson and the Obama administration's position on these matters affecting how blacks are treated by cops and how by society in general, we're talking about an issue that's pretty much in the headlines these days.
Yeah, well, it certainly is. So it should be a great session for sure, Gene. Well, I know it'll be good, and I'd like to encourage my listeners to attend. I'd like to just pick your brain on a couple of things and have you share a couple of things that you've recently written in Barron's on March 23rd. You wrote an article titled "The Ugly Side of the Fed's Reluctance to Raise Rates." Tell our listeners about that.
Yeah, the ugly side is something that I should have written perhaps the same sort of subhead that Riley wrote, how liberals who support Janet Yellen's Federal Reserve are making it harder for people of limited means to earn, to eke out any kind of decent return on their money. The Federal Reserve's 0 to basically 0% interest rate target has meant that you earn practically nothing on the bank certificates of deposit, which are pretty much been the instrument of choice for the elderly who just want to park their money and earn some kind of decent return over and above the rate of inflation. And not at all to anybody's surprise, obviously those rates have been punished down to practically nothing, certainly well below the rate of inflation for elderly people, and that the market for those sort of basically the sort of safe 1 to 3 to 5 year instruments that people of limited means tend to use for their savings has basically been abandoned. The Federal Reserve itself reported a collapse in the use of bank CDs in particular, and candidly admitted that's all because the interest rates have collapsed. And well, that's all happened because of Federal Reserve policy. And indeed, if the progressives care about inequality, we free market people care about inequality to the extent that unequal shares are the fault of federal or monetary policy, to the extent that the game is rigged against people of limited means. And in this case, it definitely is. And so indeed the Krugmans of this world and others should be especially concerned about the price being paid by people of limited means for Federal Reserve policies. Now, I go on to say that, of course, perhaps these people ought to recognize that their interests are being sacrificed for the greater good. But if you explore the greater good that Yellen's 0% interest rate policy is supposed to be achieving, then you find that it's probably contributing to the greater bad. It's essentially causing all kinds of excessive risk-taking in the market, more or less the way the Austrians would have predicted. But it's even becoming palpable to commentators like Martin Feldstein, for example, from Harvard, who had a piece in the op-ed page of the Wall Street Journal making the point that investors are being forced to take unusual risks in order to earn some kind of respectable yield on their money. And that is, of course, all because of the Fed's punishing interest rate policy.
Yeah, no question about it. I mean, pension funds are having to go out, are going out now and investing in, in Silicon Valley startups and, in Zimbabwe bonds and things like that. So it does seem a little bit, certainly more than a little bit counterproductive. Gene, also, just quickly, if I might ask you about another article that you wrote more recently in Barron's, I guess last week's Barron's, that the slow interest rates, the slow rise in inflation is delaying the Fed's hike. Now, it seems to me, what you're talking about is by manipulating the rates to such low levels, they're not allowing price discovery in the capital markets. That, I believe, is then deterring rather than stimulating growth in the economy. And if that's the case, then maybe that's one of the reasons that inflation, the Fed wants, I don't think the Fed is right in trying to see higher inflation rates, but they seem to think that's what they should be doing. They're looking for 2% inflation rates and they're not getting them. So I guess what you're saying is Yellen can't raise the rates because inflation is remaining, quote unquote, too low.
Yes, although I was probably a bit ambiguous in discussing it because I have to reflect Yellen's own ambiguity. If you try to make sense of what the Federal Reserve's forward guidance and its policies and its intentions, then you'll see that Yellen leaves herself all kinds of escape hatches. So so therefore, I said, well, let's take them seriously. Then they're getting the measure of choice. They're getting something like 1.3% inflation at most. At least that's sort of advancing toward their 2%. But Yellen, even late Friday, she declared that she may start raising rates even before she gets some indication from the price indexes. But in any case, another related question is not just when will she start raising rates from 0%, but when will she start raising rates so that the rate at least exceeds the rate of inflation. Interest rate returns normally are supposed to give you a real rate of return, so exceeding the rate. So there too, that she probably will be hiking a bit before the year is out, but it's going to be probably a couple of years before rates are higher than even conventionally measured inflation. So just as you indicate, the idea that the Fed does more good than harm, even mainstream people are beginning to realize that most of the time the Fed does more harm than good.
Yeah, unfortunately, that seems to be the case, and we don't seem to have much to say about it, Gene. The Fed, maybe in the political process, we can hope that a Rand Paul or somebody rises to challenge the Fed, but you have to wonder. It's a very powerful institution for sure. So, Gene, I want to thank you very much for coming on and giving us the update on Junto and also sharing your views on these markets. Thank you very much.
Thanks a lot. Bye-bye.